All right, so we are going to get started with Chapter 2, and in Chapter 2, we're essentially just going to look at the reporting requirements that the GASB requires from state and local governments. Again, remember, we're not going to be looking at the federal government stuff simply because they're governed by a completely different body. We are going to be discussing state and local in this class. So let's go over the objectives in this chapter really quickly. The first thing we're going to do, we want to obtain an overview of the contents of a governmental financial report. So essentially, just like a public or a for-profit company, the governments are also required to publish certain reports, right? Certain financial reports that the public has to see, that they've got to present to either some kind of government governing entity or to their citizens, so that citizens know what's going on. Next, we're going to define the governmental reporting entity. This essentially, think of this like parents and subs. If you took advanced financial accounting, think of these like parent companies and subsidiary companies, right? You're going to have a large government like the city of Springfield, and then you may have a subsidiary of that, which is the city clerk in the city of Springfield. So we'll go over how we define those entities and how we report for them as well in this chapter. Finally, we're going to illustrate the basic financial statements for state and local government. Recall, we've got two different types that we're going to use, government-wide, and then we'll do the fund basis presentations as well. So this is going to be the primary content of this chapter. So let's get into the overview of the contents that are actually in a governmental financial report. So the governmental financial report is actually called a CAFR, or a comprehensive annual financial report, a CAFR. Now, just an interesting note, the state of Missouri has recently changed what they call this. It's no longer a comprehensive annual financial report. It is now an annual comprehensive financial report. My understanding is that they changed this because everybody just called it a CAFR. And apparently the word CAFR is a derogatory term in South Africa. So the state of Missouri has decided to get ahead of the curve and go ahead and change this to annual comprehensive financial report instead of comprehensive annual financial report. However, most states are still calling this the CAFR, so that is what we will call it in this class. But you will notice on Blackboard that I have it listed as the Missouri ACFR when you go to click on that link if you're interested. So what is the CAFR essentially? Again, it's the Comprehensive Annual Financial Report. This is the financial reporting that is done for a governmental entity, right? This is going to hold all of their audited financial statements, just like you would see in a for-profit company. The government does have their financial statements audited as well. I worked for an entity in the state government that audited financial statements, some financial statements for the government. Typically, we audited statewide financial statements. We very seldomly would we audit any financial statements for like local governments like counties or cities. There's simply too many of them to do every year. These CAFRs also provide some additional supplementary information. You'll see this later. We'll refer to these as RSI, required supplementary information. Those are held within the financial statements. You can kind of almost think of those as like notes to the financial statements. Then we've got the annual report. We just got to think about these kind of like an annual report for a for-profit company, right? They include financial statements, they include an MD&A, they include all of that fun stuff that you typically see in an annual report from a for-profit business. And there are 3 sections to this, and we'll go over these in greater detail later, but there's an introductory section, a financial section, and the statistical section. So you've seen this slide before, and we're just going to do a quick reminder that we've got to, remember, we do 2 types of reporting, right? We're going to do the government-wide financial statements, and you'll see these 2 names right here, the government-wide statement of net position and the government-wide statement of activities. Those are like your income statement and your balance sheet. We'll talk about those again later. And then we also have our fund basis financial statements, right? These are going to be different for each of those fund type categories. Remember, governmental, proprietary, fiduciary, and each of them, as you can see listed here, have the different financial statements that go into them. Recall that each of these funds in itself is kind of like kind of like its own little fundamental accounting equation, right? In government, we say assets equal liabilities plus your net position. We just kind of think of net position like equity, right? We just replace that word equity with net position in the government. These are going to show the minimum requirements per GAAP, and this GAAP, recall, is set by GASB, not by the FASB. So what we see here, the CAFR, is kind of the gold standard for governments, right? This is what is really strongly encouraged for governments to prepare is a CAFR. But the problem is if you have a smaller government, like a local government, like the size of, in this area, let's say you've got a Nixa or an Ozark, they're a pretty small government. They've probably only got a handful of aldermen or city council people. They've got a clerk's office, but they probably don't have an auditor. They probably don't have anybody that's going to be able to really put this kind of detailed report together. And the GASB realizes that, right? There's a lack of resources, funding, there's a lack of accounting staff for these smaller governments to put these together. So what the GASB, the Government Accounting Standards Board, has set forth is a minimum reporting requirement for government entities to be in compliance with the GAAP that's set forward for them. And you'll see that in those smaller governments, those minimum requirements are management's discussion and analysis. That's MD&A, right? You've seen that in for-profit public accounting when you've dealt with your audit class, right? You've talked about the MD&A. Your basic financial statements, that includes your government-wide, your fund basis accounting statements, and any footnotes that you might have, any disclosures that you might have. And then also your required supplementary information, that RSI, other than your MD&A. The big difference on these is going to be that there's a lot less statistical information, and we're not going to include those combining statements. Remember, we talked about when you're moving from some of those fund basis statements up to the government-wide statements, we're going to have to combine them. We're going to have to do some conversion. Those are left out for the minimum reporting. So, as I mentioned earlier, the Comprehensive Annual Financial Report, that CAFR, has three main sections: your introductory section, your financial section, and your statistical section. We're about to go through each one of these. Take a minute to maybe pause here, write this down in your notes, that these are the three main sections of your CAFR. So, starting with the introductory section, this is really just kind of your basic getting started information, right? So you'll have your title page, you'll have a table of contents, you'll have letters of transmittal, miscellaneous items. So you may include like an organizational chart. So, here we start with the mayor, and then, these are your city council members, and this is your finance director for the city, and this is your city clerk and your utility clerk and all the people that work all under them. You guys should know what an organizational chart is at this point, but that's essentially what it's going to be. That would be something that you would include in your introductory section. One big thing to note here is that these are unaudited. Okay, we do not audit the introductory information. Okay, so just make a note of that. Make sure you're aware that we do not audit the introductory section of the CAFR. Next up is the financial section. This is going to include your MD&A. If you're not familiar with the MD&A, it's essentially it's people that we refer to at the auditor's office as those charged with governance, those that are going to be the ones reviewing the reports and things like that, the managers, right? So think about your managers, your supervisors, your directors in a for-profit company. Those are going to be what we would refer to in the government as those charged with governance, the ones that have been elected to be accountable and responsible for this information. So it's written in a paragraph, almost like a letter or memo type summary, and they just kind of discuss the things that they felt were the most important things during the year. Now, these are reviewed by the auditor, right? We want to see if we can catch anything, not really catch anything, I shouldn't put it that way, but we want to see if there's something that kind of jumps out to us that we need to be looking at a little more closely. If they say, hey, we started these new capital projects, well, where's the funding coming from? Is it tax related, or is it debt related? That kind of thing. You're also going to have the auditor's reports when they do get audited, which should be pretty frequently, like I said early on in one of the videos, consistent and frequent audits really help us hold these governments accountable. You're also going to have your financial statements and notes. These are audited, obviously. You're going to have your required supplementary information. Again, these are reviewed by the auditor, but they're not audited per se. And then you're going to have any combining statements if you need them, like, right, if you're not one of those smaller governments that's only meeting the minimum reporting requirements, right, you're going to include your combining statements. And these provide more details, right? This is kind of like if you think back to like Accounting 301, where you were converting cash to accrual and all that, that's kind of what we're doing here, right? Finally, we got the statistical section. Again, this is not audited either. The information is not financial in nature. Typically, it is more like trend analysis, right? So typically what they're going to do is they're going to present 10 years or about 10 years of information, and you're going to look at the trend lines. This is to say, oh gosh, are we losing citizens? If we're losing citizens, then, our tax revenue is going to be smaller. Are we gaining citizens? Tax revenue may be higher, things like that. So within that statistical section, kind of what I was just talking about there, if you look at GASB statement number 44 or GASB codification section 2800, I believe that's what page 46 in your book is going to tell you, is that it is the GASB codification section 2800. It's going to indicate 5 categories that have to go into this statistical section, right? So the first you're going to look at is financial trends. That's basically just going to show how the government's financial position has changed over time, right? So you think about it over the last 10 years, how has it changed? If there's been an economic downturn, you're going to see that trend. You're going to see a fluctuation between downturns and upturns and all kinds of interesting statistical information like that. The next one is revenue capacity. And really what this is it's the government's ability to generate revenue, right? So this is mostly going to be taxes. That's typically what you see here because they're generating the revenue here. You can also see service charges, like if you go to the airport here in Springfield and you park, that is a service charge the city of Springfield is charging you. So that's not a tax, but it is another source of revenue generation for the city of Springfield. One other way, a simple way to think about this, and I think it's a good example for revenue capacity, is think about if you're from this area, you know that Springfield has one target. There are no other targets within a very considerable distance from us, right? But we have a lot of little suburb towns that sprung up around us. We got Nixa, Ozark, Republic, Battlefield, smaller towns like that. Now, everybody from outside of Springfield, from those little towns, is driving in to shop at Target. That is a great opportunity for Springfield, for the city of Springfield, to generate sales tax revenue. Well, what happens if Nixa builds a Target, or Republic builds a Target, or all of them build a Target in their own towns? Well, now we've lost that sales tax revenue, right? So that's something we would look at with revenue capacity. The next thing is debt capacity, and that's really just looking at the ability for the government to take on more debt. Can we issue more bonds and still pay those back? How are we going to pay those bonds back? Is it going to be through, are we going to service that debt through tax revenue? Are we going to service that debt through some kind of service revenue? What is our plan for that? And do we have the ability? Do we have the capacity to do so? So I'm trying to think a good example for that. I think the bonds, issuance of bonds as a debt capacity is probably the best example you can think about that you can use for that. Should we issue more bonds? If we decide to issue more bonds, how are we going to service that debt? Does our current tax revenue, historically, looking back historically, do we think that our current tax situation will allow us to service that debt? So. Demographic and economic information. This one's really, really important, right? So this is more of the socioeconomic type statistics that you're going to look at, the data that you're going to look at. This is going to be, how many retirees live in your town? How many college students live in your town? Is your town growing? Is your town shrinking? Those kinds of things, right? Like I talked about earlier, if our town is growing, then we've got property taxes that we collect, and we're collecting higher taxes. Again, I talk about tax a lot in this class because that is the primary source of revenue for a government. Again, that is one of the things that sets government apart from a for-profit or for an NFP, is that we have the ability to levy a tax, and that is our generally speaking, that is our highest source of revenue. So, is the town growing? Well, we got more property tax. Is it shrinking? Well, we got less property tax. Do we have a lot of retirees? Well, unfortunately, maybe some of them are, passing away, and we're not, you think about someone like the joke is, always Boca Raton. The old people go to Florida and live in Boca Raton, and it's like, well, how do they account for that? But they got so many people, so many retirees. How many of them are no longer there in the next couple of years, right? So the third one, or the final one here, the fifth one, is operating, right? And this is just basically information about the operations of the government. How many employees do you have? How many facilities do you have? What's it cost to use those facilities? How are you utilizing those capital assets, those long-term assets like that? That is going to be the operating portion of the statistical section.